Good morning and welcome to 55 minutes of current and relevant business conversations, which is a norm here on Business Morning in Channels Television. I'm Amy John McQuarrie. We get right into it, beginning with grains from the global scene. Chicago corn futures lost more ground on Thursday, with the market dropping to its lowest since early 2021 after a closely watched U.S. government report estimated all-time high production. Wheat prices also weighed down by a larger than expected U.S. production forecast from the U.S. Department of Agriculture, while soybeans rose. The most active corn contracts on the Chicago Board of Trade lost 0.3% to $4.82 for half a bushel after dropping earlier in the session to lowest since January 2021 at $4.81 a bushel. Wheat fell more than 1% to $6.26 for a quarter of a bushel after hitting its lowest since June at $6.22 for a bushel, and soybeans added 0.9% to $13.39 for a quarter of a bushel. U.S. government had said that farmers will harvest massive crops of both corn and soybeans this year, boosting the supply base despite drought conditions stressing plants during early stages of development. In the oil space now, prices climbed on Thursday after United States inflation and economic data sparked hopes that the Federal Reserve may have fewer interest rate hikes in store, and Chinese trade figures showed monthly oil imports were the second highest on record in June. Brent crude futures gained 21 cents to $80.32 a barrel, while U.S. West Texas Intermediate crude futures were up 13 cents to $75.88 for a barrel. U.S. data on Wednesday showed consumer prices rose modestly in June, registering the smallest annual increase in more than 2 years. And markets expect one more interest rates rise before oil traders hope that it may be it, because higher rates can slow economic growth and reduce oil demand. Meanwhile, China's crude imports in June total 52.06 million metric tons, that's about 12.67 barrels a day, and jumping 45.3% on the year and hitting its second highest monthly figure on record. That's according to data from customs. Crude oil imports for January to June were up 11.7% at 282.1 million metric tons, while refined oil products exports for January to June were up 44.7% at 31.31 million metric tons. Another factor capping price gains was a U.S. Energy Information Administration report of a much bigger than expected U.S. crude stock build of nearly 6 million barrels last week. Gasoline inventories remained unchanged at 219.5 million barrels during the 4th of July holiday week, a situation that is almost unheard of, according to some of the analysts and traders' observations. Still talking oil now, but edible oil. Malaysian palm oil futures extended early losses on Thursday, weighed down by forecasts of improving production in the world's second largest producer, while estimates of all-time high U.S. soybean output also dampened sentiment. The benchmark palm oil contract for September delivery on the Bursa Malaysia Derivatives Exchange slid 91 ringgit, that's about 2.32%, to 3,835 ringgit a metric ton, and that's by midday. Malaysian production are showing signs of improvement, and the ringgit is strengthening against the dollar. And also, top producer Indonesia is planning to set its crude palm oil reference price higher at $791.02 per metric ton for July 16 to 31st, making it less competitive against Malaysian oil. All right, we'll talk about oil, both oil, shortly. After this break, we'll have the commodities segment. To stay with us. welcome back to Watching Business Morning here on Channels Television. And as we told you, the price of Brent went up. I think this Tuesday when we're having this conversation with Dumebi, it was about 75, 76, so thereabout. Today is past 80. It's good for Nigeria, but let's find out if that the cooling of inflation in the United States is a major driver of this. Dumebi Oluwale is here. Hi, Dumebi. Good morning.
Good morning.
So, I mean, imagine if you had invested some money in oil. From Tuesday till now, you make at least $5. I mean, you just take profit and walk out.
Good news for investors then.
Bad news for buyers.
Good news for investors then, and good news for exporting countries.
Like Nigeria, if we can boost our production.
Yes, yes, that's the caveat.
That's the caveat there. But I mean, what's the major, was it the inflation of yesterday?
Well, not only that, Saudi Arabia as well, they're sticking to their production cuts, extending it up until August. So
they are cutting 1 million.
1 million.
Russia is cutting 500,000.
Yes. So that's tight market supply side by side with cooling inflation in the U.S. has, was what really drove the increase in oil prices today. And that's one of the reasons why this is really significant, because we're entering into the second half of the year. We're already in the second half of the year, and the expectations are that this tight oil supply might outweigh low Chinese demand, at least for the beginning of the first half of the year, because markets are still weighing the decline, the slowdown in the Chinese economy against supply shocks to oil. So it's still very shaky as usual. Oil prices are very volatile. So many factors affecting oil prices today. So,
all right. So this U.S. inflation obviously is good news, and I was hoping that it will come close home. But because going from 3%, I mean 4% to 3%, that's a whole 1%. Within a month. If it was Nigeria, you know how we are. We'll ask a lot of questions to say, are we sure that these numbers are really correct? Do they really? Because if you talk about 1% drop in prices, it's actually very significant.
Exactly.
And we expected. I wish I'd remembered. I would have spoken to somebody in the U.S. I think I've spoken to somebody in the U.S. recently to find out how much it has reflected in their everyday buy. Because 1% within a month is a huge jump in inflation.
Yes, you're very right about that. It's extremely significant for people in the United States, especially because the pressure on consumer disposable income is significantly lower now. So what this simply means is that prices of commodities are cheaper for people, rent, because with the increase in interest rates, with the increase in commodity prices, significant people have cost of living has significantly increased, and we know there's also the pressure coming in from oil prices and all of that. So right now what we're seeing is that this the US Fed's consistent increase in interest rates are beginning to at least crack down on inflationary pressures. And one of the main things that one of the main sub-indices of inflation that the US Fed really uses to track inflation is core inflation, which cancels out all the noise from food and diesel, food and energy prices. So essentially, in June, core inflation declined, or at least it moderated from 5.3% to 4.8%, meaning that the interest rate increases are beginning to at least have some significant impact on inflationary pressures. So what this means is that one of the reasons why market sentiments are a bit strong, it's that it might influence the Fed's decision to continue its temporary pause, at least also sustain the temporary pause on interest rate hikes, at least in the meantime. And with what has happened with inflation coming down, what we eventually saw was that the US dollar as well lost some steam, and that was able to at least provide some level of relief to other basket of currencies and
make some of global commodity prices cheaper.
Exactly, and make commodity prices as well cheaper for countries for heavily importing countries, because now most commodities are priced in the US dollar, and this temporary relief will be good for countries.
So I wanted to say if there are lessons we could learn from that to get our inflation down, but I think it's majorly interest rate hike that they've been doing, which is what we have been doing, but obviously that doesn't have the same effect because the cost of our inflation is different from what is causing their own inflation.
Yes, you're very, very right about that because those are, for Nigeria and the US are extremely two different economies as it is. The only thing is that the things that link us together right now is the fact that Nigeria's currency is pegged against, is pegged against the US dollar, and we have to do things to mirror what happens in the US so that investors don't bet against the Nigerian economy, don't bet against our currency, especially when interest rates have been rising in the US and the US dollar has been getting, has been strengthening over the past few months since the interest rate cycle has continued. But bringing the conversation to Nigeria, the reasons why the response in interest rates, the response of Nigeria's Monetary Policy Committee might be different from that of the US is because first of all, our inflation stoking factors are very different. The structural factors that are affecting Nigeria's inflation, and aside the monetary factors, because in theory you have that inflation is too much money chasing too few goods, but when you break that inflation definition apart, you realize that first of all, where is the money coming from for people to spend to chase the too few goods that are currently existing? Then two, you also look at the consistent increase in commodity price. So people first of all are not earning enough, and number two, people are not also demanding so much simply because the price of these commodities are higher. Then you now look at the other structural factors like insecurity, causing food prices to be high, and all of that. Then the final thing is that our monetary policy transmission mechanism in Nigeria is also very weak. So that's why you see that there's a time lag for when the MPR is increased, and then other interest rates like interest on government securities, the treasury bills, bond rates as well, before you see all of that even tick up a little bit, because the monetary policy transmission cycle is that once there's an increase in the anchor rate, we should see all the other interest rates in the economy increase, so that we're able to mop up excess money supply in the economy. So it's essentially a mopping up. But in this situation, interest rates on those securities are not rising as fast. So the incentive to mop up supply, or the incentive of people to put their monies in the bank is not so high, or to invest, or exchange bonds for cash. It's not there. Savings rate has barely ticked up, and who really has the money to put in the bank to save?
Where does the devaluation of the naira get into all of this?
Well, when we look at the fact that, like I said, you have to also break this apart. So when we look at the exchange rate system in Nigeria, so there are so many factors that come into play. You have the issue with supply, you also have the issue with demand. Now, the exchange rate devaluation, one of the reasons how this comes into the inflation conversation is through import costs. So you have that manufacturers who want to import their raw materials, they have been getting interest rate at a more expensive rate, typically a blended rate. So they source about 90% from the parallel market, that's the black market, and then source the remaining 10% from the official market. And that blended market rate has always been more expensive than the official rate. So what this simply has done for them is just make these blended rates official. So really, nothing has changed so much in their import costs.
But the gap between the parallel market and the official rate, the gap between has reduced. So that should also reduce their cost, even if it's for a bit.
So you think of it this way. The parallel market, the official rate was 462. Black market was around 750. Let's use 750. The blended rate, that's somewhat like an average, was probably settling around 700, 702, sometimes 715 for these marketers. Now we're having an official rate of 750, 770, So really, what has happened is that their access, because it's two issues, the exchange rate that they're getting, which is the price, and their access to the official market. So what has happened now is that now all the manufacturers, most of the manufacturers that we're getting at the blended rates now have access to the official market. So the issue of access has, reduced, somewhat reduced. But the issue of price hasn't really changed much, because they were already using these blended rates.
And now the blended rate seems to be the official rate.
So that's exactly what has happened. So the price really hasn't changed. So that impact of the exchange rate pass-through effect to commodity prices is still there. Is still there due to import costs. And remember that while this desegmentation of the exchange rate has happened, yes, there's the conversation around easy access. The import restrictions on commodities are still there. So the conversation around having access to official markets, yes, is there, but some of these manufacturers still would have to source from the black market. Reason being that restriction on importation is still there.
It's still there, so you still have to go the other way to get it.
Exactly.
But all of this is supposed to make us sell more of our cocoa, because I mean, when a currency is devalued, then the commodities are cheaper.
Yeah.
You know, and it's supposed to attract more market, more demand.
Yes, there's that aspect which is good for our trade balance. Nigeria's current account recently, moved into a surplus. So that's one good news, and those are some of the things that we could likely see, coming from this exchange rate devaluation that has happened. Our current account surplus, coming into surpluses simply because now what we get in dollars when we convert into naira is a lot more. So, but like I said, like we agreed before, there's so many other structural factors affecting production of some of the agricultural raw materials that we export. For example, you look at there's the port disease. You also look at the issues farmers experience while even planting. Insecurity is still a big issue. And while we're excited, okay, we're getting into almost like the peak of the rainy season and all, which might be good for cocoa harvest and all, there's still so many other factors to consider that these farmers have to go through before even getting their harvest out and then exporting.
All right. What about other commodities? What's happening to them?
Well, a very significant one, price of flour is up by about 5%, just because of, like we said, this issue with like importation, and then you also have
so
like
increased operating costs.
Exactly. So issues with operating costs and the global price of wheat is still quite high for manufacturers to also import. Then down the value chain, you look at how the increase in the price of flour is affecting other commodities.
Yeah, I heard bread is going to go up about 15%.
Exactly. So then you see that there's that chain reaction, happening from what is happening globally. Then you have the issues that manufacturers experience in terms of like the high energy costs. The petrol, the fuel subsidy removal has significantly increased their operating expenses. Then you also have the exchange rate devaluation as well. And like I said before, these import restrictions are still there. So you have all of this coming into play, still keeping their operating costs high and affecting commodity prices.
And the Black Sea grain deal, it's 18th. It expires on the 18th. Doesn't look like there's going to be renewal. Should we expect significant spillover effects into Nigeria?
Well, there are two ways. We've had incidences of this Black Sea deal just getting very close to the time, and then
something good eventually. It was like the 9th.
Yeah, something good eventually happens, and then Russia says, okay, you know what, I'll continue. So there's a chance of that still happening, just to keep commodity prices moderate, because the United Nations, the World Bank, everybody is just trying to keep inflation, low. Then you also have the fact that just in the event that this doesn't happen and commodity prices go up, so this will significantly impact the price of commodity of durum wheat that Nigeria significantly imports, and then the price of flour, and then the price of bread and other
I'll stop
commodities.
Eating bread.
But really, what other alternative? Yam?
Yeah.
Well, it's true.
It's local. We'll go back home.
Cassava, I guess.
Cassava bread.
Well, maybe. Yeah.
All right, Jumebi, thank you so much. Thank you for your time and your perspective this morning.
Thank you.
All right, that's it on the commodity segment. Looks like we have some hard days coming ahead, but I mean, we'll see how it goes and we'll make it through. Let's take a break now. When we come back, another conversation awaits you on the other side of Business Morning.
Gathered here are chartered accountants and players from the financial space for the investiture ceremony of Mr. Innocent Okwuosa as the 59th president of ICAN. This ceremony also attracts family and friends of Mr. Okwuosa as well as royal fathers. In his acceptance speech, the new ICAN president promises to set the institute on a new trajectory.
We will chart a deserving future for ICAN. Surely, ICAN will be on a new trajectory this presidential year.
Goodwill messages also pouring for Mr. Okwuosa, including one from Nigeria's Accountant General.
Well done, President, and I pray that this 1 year of your tenure in the office, God will help you.
Mr. Okwuosa is also quick to emphasize his vision for the body.
We also hope to engage with the National Assembly because the National Assembly is the one that makes these laws. They need to understand that ICAN brand does not need to be diluted, has not a need to be diluted. We operate as a professional body with our peers in UK, in South Africa, in India, and we want to be able to operate like those other professional accountancy organizations. But the proliferation of accounting bodies will help to diminish that, and we hope to address that. Secondly, accounting is operating in an environment permeated by digital disruption, technological disruption. We want to position accountants to leverage on that, to improve on their practice.
ICAN is also appealing to the World Bank to approve loans for the federal and state governments in Nigeria based on their ranking on the ICAN Accountability Index. And the new ICAN president says the index was developed to promote high-quality public finance management system in the country.
Well, we're still here now talking infrastructural development with a score of 48.33 out of 100 total points. Nigeria has over 50% infrastructure deficit. Also, Nigeria was ranked 24th out of 54 African countries in the Africa Infrastructure Development Index for 2020. The country's infrastructure deficit amounts to about 30% of its gross domestic product and falls short of the international benchmark of 70% set by the World Bank. How can we cover this deficit? We know we've been told that with Nigeria's population growing at a rate of over 2.5% every year, expected population to hit 400 million in 2050, that the country might need to invest at least about $3 trillion to reduce that infrastructural deficit. Who will bring this $3 trillion? Well, perhaps it will come from the private sector. That's what Mr. Emmanuel Odemayowa is here, the managing director of Kavli Group, joins us to see how we can get this $3 trillion naira. Mr. Odemayowa, thank you so much for your time this morning. We're looking for $3 trillion naira, $3 trillion, not naira.
Yes. Yeah, good morning. Thank you for having me. Yeah, of course, when it comes to infrastructure development in Nigeria, and of course globally, I think the word is collaboration. Basically, the government, both at the federal and the state levels, are actually responsible for developing infrastructure. But if you look at the way it has gone in the recent times, you discover that it is not something that the government can do alone, whether at the federal level or even at the state level. So the $3 trillion you mentioned, majority of it will have to come from the private sector. There are a lot of projects right now that are being done in terms of PPPs by the federal government and state governments, even at the local government levels. We have some of them that already have PPPs in place. I mean, that's the public-private partnerships. You know, they are doing it and it's running very well. But majorly, I think for us in Nigeria, what we have to look at is about creating a blueprint.
Don't we have one? We do have some policies. At least we know there's the credit tax, the infrastructure credit tax. There's also, I think there are about 2 others. We have Dangote really active on one of those. I think that's a tax credit, where we see some of the roads that he's done.
Yeah.
So we do have some of these policies, but maybe must a company be as big as Dangote to be able to jump on those platforms?
No, I don't think so. Of course, like we said, $3 trillion is not a small amount of money. So basically, it's not just going to be about one company, whether it's big or whether it's small. It's going to be about a combination of many companies. So basically, for private sectors to come to the infrastructure development space, the federal government has to do a lot of things. Number one is creating the environment. You understand? The majorly, again, is about the government being able to identify very bankable projects.
Like?
You understand? So, okay, for instance, you mentioned road. I remember the Lagos-Ibadan Expressway some time ago was concessioned, to a private sector player. So for a project like that, they were meant to have, toll gates. You understand? So, because basically, when any player in the private sector is coming to infrastructure development, they are coming with the mindset that they're going to make returns. They're going to make profits. So, such projects will have to be bankable.
But have we explored that tax credits policy? Because, I mean, when you talk of tax, especially at this time in the country, the government is very serious about taxes, looking for how to expand the net and all of that. And then we have, according to the finance bill, an entrepreneur would use an average of about 30–40% of its profit for taxes. So if you give a holiday to a company or a business, in exchange for that, I think a lot of businesses will jump on that. But it seems we have not gotten a lot of participants on that platform.
You said earlier that, of course, we already have some policies in place. And I mentioned blueprint. You said we have blueprints in place. But what we are talking about is, of course, the one you made reference to, the one Dangote Group is doing, that is Apapa-Oshodi Expressway. It's a very good example in terms of collaboration between the public and the private sector players. So, but what we are talking about is that let's have a blueprint in place. Now, Dangote is a massive company. There are other companies within the infrastructure space, that can come into it and also do what Dangote is doing. Yeah, they are
but
very,
why are they not coming
big.
on? Why does it seem they're not coming on?
And that is why
maybe the conditions are too stringent or something. I mean, you're in the private sector. Is there any project you're working on?
Yeah, so for us at Cavalry Group, we try to see how we can encourage private sector players to come into infrastructure development.
How many do you have now?
Yeah, okay, for us right now, we are doing projects. Majorly, we are looking at sustainable infrastructure development. Because right now, even at the level of United Nations, that is the major focus they are looking at.
Yeah,
so we have projects within the Cavalry Group. Apart from our real estate projects, we have...
I mean, we're looking at our infrastructure.
Yeah.
If you do real estate, for instance, you're doing it as a business, right? Yeah. So we're talking about infrastructure, national infrastructure that will affect the GDP of the country at the end of the day. Yeah. So why don't you have a lot of the private sector participating on this policy or in this policy?
Yeah, it's about the attraction. You understand? It has to be very attractive. I mentioned earlier that private sector players, they are looking for returns. They are looking for profit. We have projects. We are going into power. You understand? We are going to energy. Right now the sector has been deregulated. So some players are coming to the power generation, space.
So what would make it attractive to you, for instance, since states have now been allowed to delve into that? Yeah. What would make it attractive to you to work with Lagos State's government to provide power?
Yeah, so I think for us, major area is the area of tax holiday. You understand? That you mentioned before, tax holiday, tax credits, that you mentioned before. We want to get such assurances, like the power project that we are working on right now at the Bejuleki axis of Lagos. So we have been discussing with the state government. We are trying to see...
Are you getting the attention of the state government?
Yeah, no, we are getting their attention. I have to let you know, actually, that both at the federal and the state levels, they are actually very eager to do business with the private sector. But basically, there's still that angle of the blueprint, a particular blueprint that if you and I come into that industry right now, we can say, oh, okay, so and so are the things that we need to follow. These are the processes that we need to follow. Once we do this, we know that we get these things right. So we still don't have.
So we don't have that blueprint.
We don't have the blueprint.
How do we solve that problem?
Thank you very much. So at Cavalry Group, in 2017, we put together a National Infrastructure Summit, in Lagos, and it was well attended. Even at the level of IMF, we had representations and all that. In early 2024, we are putting together another National Infrastructure Summit. And we are doing it in Abuja this time around.
Yeah, but I guess it goes beyond the summit, because what comes after the summit? Where is the blueprint? Who are those who were supposed to, take the implementation of these blueprints to the next level? Who's talking to the government? Who was putting it together? How do we get it out there to become a public document? I guess those are the...
It won't just happen overnight. You understand, as well realize, within the private sector, we have been coming together. You understand, we have different chambers of commerce and all that. They're also talking about developing infrastructure. So there are a lot of breakfast meetings, a lot of sessions, that I always heard, and this all gets towards how we can talk about creating a blueprint, that we directly attract players in the private sector to come, players in the private sector to come into infrastructure development.
So I guess as the media now, our job now should be, how do we push for that blueprint? Because, it becomes a waste if we're having meetings and we have great ideas, and we discuss great ideas, and we have great policies like the tax credit. Every business, I believe, would want a tax holiday, but we don't see the participation. It means there's a missing link, So I guess as the media now, we'll try and pursue the government and get them to give us that blueprint to attract people like you to get involved in more infrastructure development. Well, thank you so much, Mr. Emmanuel Odemayowa. We hope to see your company and you involved in more PPP projects for national development, and then we'll be glad that you were here. Thank you so much for your time.
Thank you for having me
this morning. All right, so that was one way that we could get infrastructural development. Every time we talk about, for instance, we talk about the issue of inflation, and we say one of the fueling factors would be infrastructural development, the deficit of it. How do we get for instance, the farm produce from the farms to where the consumers are? These are some of the issues that we need to deal with in Nigeria. We'll promise to get at least Lagos State government to talk about that blueprint to get more private sector participation in PPP. Now let's head to the markets now. Anita Edet is standing by. Yesterday was a red day for the equities market. I guess you cannot always have it green. Investors have to take out some profit at some point.
Yes, you're quite right, Ini. And I would say it's not in a panic mode, because so far we gained about 1.43 trillion naira in just 2 days. And then, of course, we
lost how much yesterday?
Yeah, we lost about, on your board there we lost about 800 and more than nearly
less than a trillion.
Naira.
Yeah. So, we're still in the positive trend.
Exactly. And then we're still at the 15-year high, which we left sometime. The historical high for the all-share index, let me put it out here. It was 65,669.29. It was achieved as at July 11, 2023. So that was the highest, and of course we're that close. We were that close, but we're falling.
We're still
below.
that close, Anita. Yeah, we'll get there.
We're still in the 15-year high.
Yeah.
So now, the world market, just like we were saying, the market, of course, is a barometer of economic performance, and it also shows you that investors are really going into this market, making the money. The yields on the market, on the equities market is really favorable, especially when you look at the Morgan Stanley index for market performance. Nigeria's stock market is still very much doing very well, and at the same time, we saw the year to date, it has moderated, no thanks to the decline that we saw on the price of Dangote Cement, as well as 62 other losers on that market. You could call them losers because their share price was down. Month to date, we've been moderated to about 5.1%. Now, let's take a look at the sectoral performance. It's another red, flurry of red for the market, and we saw the impact of Dangote Cement printing, which was down by approximately 9.6%. That printed the red color there for the industrial goods counter, 5.39%. And of course, we also saw the insurance sector being the biggest hit there, 5.42%. The banking counter, no thanks to losses from Axis Bank and some other bank. So in other words, all of these sectors saw profit taken by investors, taking the impact. But on the other side, on the flip side of the market, we saw activity. In terms of activity, the performance was on the upside. It increased by 37.7% to about 1.16 billion units. UBA was the most traded stock by volume and value at 177.79 units and 2.4 billion naira in terms of that valuation. So now we'll be talking about, we ought to be focusing on the impact of FBN share. It's been in the news, FBN shareholding tussle. We heard about the back and forth in between about Otudeko and some other investors there. And also we have that the Securities and Exchange Commission is investigating the shareholding acquisition by the subsidiary of Honeywell Group. So now for that market, we see the volume of transactions being in the green, as well as the value, what you call the activity chart. And of course, our investors are saying that the market is going to make a slight rebound from the profit take that we saw yesterday. So we'll be having our eyes out for that market. And of course, when we have our guest to tell us more about that market, we will definitely have him there. Now we move over to the other side of the market. That's the fixed income market. What we saw yesterday, we had the primary market auction. We had the NTB auctions, primary market auctions by the Debt Management Office. And of course, we saw a lull for the Treasury bills markets. And that's because they stayed on the sidelines in anticipation of the outcome of that market. But on the board for the FMDQ Securities Exchange, we saw that the bonds market for the 27th of April, the paper had the highest attraction, 16 deals worth about 16 billion naira. And that was a major contributor there to other instruments that were traded there, 20 deals, and then 21.1 billion naira for the total value. Over to the other side of the market, for the bonds market, we saw trading in the FGM bonds market very bullish, and the average yield there, it contracted by 3 basis points to 12.7%. So for that market, we saw buying interest by investors on the February 2028 paper, which was down by 15 basis points. The June 2053 paper, it was down by 29 basis points. That's for those side of the market. Conversely, the average yield closed flat at the mid-segment of that market. But this is what you have for the picture for the bonds market of on the FMDQ trading platform. Then in terms of currency, the market had a bit of a reprieve yesterday. It was up by 0.8% at the INE window to about 782 naira 49 kobo against the dollar. And then for the overnight lending rate, it expanded by 8 basis points to 1.3%, and that's in the absence of any funding pressure on the system. So now, for that market, we were talking about the equities market, that the equities market, 15-year high, and is still going to climb, but the market is in session already started by 10:30, and then, of course, we're still seeing that the markets will be in the green, but fingers crossed, maybe it will make that rebound back into the positive territory, and possibly, we had our analysts talk about the market that it would hit the 67,000 level. 66,000 is what was the highest so far for the market, and 65 is where we left it before we're back to 64,000 points. So
yeah, we're close to 65, Anita, so don't worry. We're still
I'm not worried. I know that this market
we still have the bull sentiment.
Exactly.
I think they call it Tinubu now, so we'll
Tinubu, and then you have a Tinubu.
No, it's Tinubu for now. So
okay,
we're going to get there. We're going to get to 65. But thank you so much for giving us the market analysis. Now let's head to London, where Juliana is standing by to also give us updates from the United Kingdom. Juliana, good morning. So we woke up this morning to hear about new jobs passport. I wonder how it looks like, but what's this about?
Good morning, Ini. Yes, you're absolutely right. The Department for Work and Pensions, in conjunction with the Ministry of Defence, have launched this jobs passport for previous members of the armed service. We know that there's been a big discussion in this country across several years about the government's duty of care to those who have served in the military for several years, and they've left the service to come out and find that it's just very, very difficult for them to re-enter the workplace, which is why this passport has been launched. It's basically going to give prospective employers an opportunity to basically look at the wealth of experience and skills that these ex-veterans do have. And it provides details about support that can be available for them, whether or not it's funds to help with accessibility in the workplace, or courses that these now civilians can go on to improve the quality of life. And this is obviously coming at a really important time. We had data from the labour market this week showing that we still have a record number of vacancies, over 1 million in this country, much higher than it was before the pandemic. Lots of people suffering with long COVID, struggling to get the appointments at the NHS so they can get back to work. So I think the government are trying to do as much as they can to make the labour market more viable and to assist with the economy, which is why this passport has been launched today.
Yeah, and talking about making employment more valuable or more attractive, you also have Prime Minister Rishi Sunak about to make a huge decision on public sector pay deals today.
Yeah, this is going to be a major talking point between the Prime Minister Rishi Sunak and the Chancellor Jeremy Hunt. Quite rightly, as you said, they are meeting today to review the independent pay review bodies on whether or not there should be an increase in public sector pay. Of course, this has led to a significant amount of disruption in this country. It started off early last year with the winter of discontent. It's continued on to 2023. We've seen a raft of union members downing tools and striking. In fact, last week we had 2 teachers' strikes. I believe junior doctors are going to strike, and it is all about pay, jobs and conditions, pay being the most significant factor. One of the reasons why the Chancellor is not keen to increase public sector pay is because of CPI, which is currently running at about 8.7% in this country. I believe public sector bodies are asking for pay increases of between 6 and 6.5%. The Chancellor doesn't want to borrow to pay for these rises. So where's the money going to come from at a time when the economy is in tatters? We did have GDP data for the month of May released this morning. Unfortunately, GDP dipped that month, 0.1%. This follows a 0.2% increase in April. We did have the King's coronation, so I think a lot of economists were anticipating that the economy would have risen because of the amount of tourists that flocked into the country, and for the fact that over that bank holiday, pubs and bars will fall. But sadly, that hasn't been the case. GDP has fallen, which is going to make this decision, which we're expecting at lunchtime, even more difficult.
Yeah, well, I guess those tourists and their activities were not huge enough to move the GDP. But thank you so much, Juliana, for giving us your perspective this morning. All right, talking about perspective, let's see the crypto perspective to what's going on at this time. I see a lot of red.
Yeah.
I think Laddie has, the bounce in Laddie's steps is reduced. It's no longer a greedy market.
It's still greedy.
It's still greedy, a red greedy market.
The color is what we're seeing right now. It's red, even though we got that good CPI data.
Yeah, that was good.
US.
It moved oil, like it just went that way.
Oil went up, gold went up. We saw...
Laddie, which of them did you invest in?
None, actually.
Oh,
and,
that's sad.
Yeah.
Missed opportunity.
As usual. And Bitcoin there, not reacting to that CPI data we got from the US yesterday. 3%, that's what the inflation rate grew by in June. And we'll see it's still red across board, just the stable coins in the green, signifying that traders are moving more into stability at this time. Let's look at the top cryptocurrencies we track. Okay, greed, let's look at the sentiment. Take me to that sentiment there. We see 57 points. Greed, still greed, at this point, but lesser than what we had. We're about 60, yesterday, but we're seeing 57 points, showing that traders are getting less greedy, at this point. Let's look at the top cryptocurrencies now with Bitcoin. Bitcoin. We see Bitcoin there trading 30, still above the 30,000. Talking about the top cryptocurrencies that we track. Let's bring in Michael Inaji now, financial market analyst. Hello, Michael. Good morning.
Morning, Letty. Thanks for having me.
Great to have you, Michael. So, yeah, we're seeing the market quite not as bullish as what we saw in traditional markets in the U.S., you know, reacting to that CPI data for June. Why is Bitcoin not reacting? Is the decoupling that deep right now?
So the decoupling is there. Unfortunately, you're looking at traditional stock market going up, and Bitcoin basically has been trying to punch through 30,000 for a while now, and it's been struggling to get above 30,000. Most likely, we're most likely going to have a push up because at this point, technically speaking, if you look on the Bollinger Bands, it's getting tight, and we're about I would say no more than 5 days out from a major move. And most likely, it's going to be either punching up. But we're about 5 days out, 4 days now out at this point from a major move. We've just been squeezing too long in the same band. And so there's bound to be a move very violently to one side at this point.
And getting to know that side is definitely the problem, you know, right now. Exactly. Where's it going to go, up or down? But let's look at the U.S. government there. They're selling the Silk Road-related Bitcoin, selling about 9,800 Bitcoin, worth about $297 million. Are we expecting the U.S. government to actually sell most of that Bitcoin?
Yeah, so we're not quite sure what exactly they're trying to do with the coins. What they've done so far is they're just reshuffling the wallets. It's something that they've done in the past before they sold. Last time they sold a couple $100 million worth of Bitcoin, generating about $215 million back in March. And before they did that, they sent the Bitcoin to an unused wallet. They were reshuffling it. They're just doing the same thing again now. So we're not quite sure if they're going to sell it. But it looks like very likely, most likely, they do intend on selling very, very soon.
And if they sell, what happens to the market? What happens to the price of Bitcoin if they sell all that Bitcoin?
Well, 10,000, to be frankly honest with you, 10,000 Bitcoin in the grand scheme of things is not a lot of Bitcoin. So it's not going to be a lot of selling pressure. It's going to be easily absorbed by the market. It's really truly not a lot of Bitcoin in the grand scheme of things, considering we have billion-dollar daily volumes.
Right, and still in the U.S., you see U.S. Attorney Damon Williams has announced the first ever criminal case involving an attack on a smart contract operated by a decentralized cryptocurrency exchange. What is this going to look like? Is somebody going to go down for this one? Talking about the decentralized exchange.
Yeah, so this is a very pivotal case from the U.S. government. Basically, what they're saying is they're now basically coming in and saying that if you misintentionally use a smart contract for illicit gain, they technically consider that wire fraud. That's unprecedented because for the longest time, people just thought, if I'm smart and I find a vulnerability in the protocol and I break it, and I take the money, people just thought, that's your incompetence. Why should I go to jail for, you being an incompetent coder? Well, the DOJ has basically come out and said that's wire fraud. For all intensive purposes, if you misuse a crypto contract for the sole purpose of illicit financial transaction, basically meaning fraud, they will treat it as wire fraud because the definition of a wire under the law is very obtuse. A wire could be anything from an electronic email to a phone call. So now they've included that to include a decentralized smart contract. It's a very pivotal case in the sense that they've set precedent now. So if this guy ultimately ends up getting indicted, every other DeFi hack that you see, if the DOJ finds out who did it, essentially you're going to jail. And there's no ifs, whats, buts about it. The crazy part is the guy stole $9 million, and the exchange, he was trying to launder the money through an exchange, and the exchange basically told him, if you return most of it, we won't snitch on you. Turns out they despite him giving away back almost 80% of the money, 85% of the money from the exploit that he found, the DOJ still went to bet on him, and they're trying to press him for wire fraud charges. So this is completely different than what we've seen before.
Right.
He found the vulnerability. He tried to return over 90% of it, and he tried to take a $1.5 million bounty for his, because the thing in crypto is if you find an error, technically you should be paid for it. So it's like in this point, like the $1.5 million is easily could be looked at as his bounty for finding the exploit. So this is really, really, really.
So
really
no place for white hat hackers in the crypto space, I guess.
Yeah, that's exactly what the DOJ is saying. They don't care how you might look at it. You might think you're doing white hat work and you're trying to help the people, fix their errors, but the DOJ frankly doesn't care at this point. They're saying it's all wire fraud. So unless you're contracted by the exchange itself, or you come to an agreement with the exchange, you can't just like return the money and say, "Hey, this is what I'm going to take 10% for finding the error." They consider it wire fraud. It's absolutely a big change in how the DOJ has been looking at DeFi protocols, and it's something that everyone should be aware of because you don't want to fall on the frail side of the law by ignorance.
Exactly. Thank you so much, Michael. It was great having your perspective. Thank you.
My pleasure. Thank you, Letty.
All right, now let's look at the top gainers. AGIX topping the counter there. Then we see top losers, double-digit losses. We're seeing Canva there down 10.71%, 93 cents. Algo also on the downside at 4.83%, down to 10 cents. So, yeah, that's how the market is looking. And if you find a vulnerability in the smart contract, at this point, in any DeFi protocol,
I can get paid for it.
Yes, you will not be paid for
go
it.
to
Yeah,
jail.
the U.S. government will definitely come for you.
Well, U.S. government, not Nigerian government.
Not Nigerian government, just
so
the US
I get. But I'm really interested in that. How many thousands of Bitcoin did you say
About
the U.S.
9,000
government?
Bitcoins worth over $200 million.
I wonder if they would do, like a price slash. Things like that.
Oh, maybe like buy one, get one free.
That kind of a thing.
Wow,
I could buy
that would be incredible. That would be incredible. I don't think they'll sell for that.
All right, Laddie, thank you so much. See you at 1:30. So that's it on the program today. Thank you so much for being part of the program Monday, Tuesday, and Wednesday, Thursday. Don't forget we have a final one tomorrow, and you can always watch Business Morning at any time on Channels Television YouTube channel. You get everything and Business Incorporated. But 1:30, Laddie Williams will be back to give you an update from the world of business. I'll see you at 10 p.m. for the Stock Market Report. I'm John McCoy.